Hey, welcome to this video. I'm Charlie's Money, and today I'm going to be reacting to SEC Filings Explain 10K, 10Q, 8K, and more. As an investor, I use the SEC filings all the time to do research into stocks. So let's see if there's anything that I do in this video that isn't mentioned, and I'll try to give you some more context on things that they explain. By the way, feel free to sign up to my Patreon where I run an investing community. I also created a course called How to Invest Like Warren Buffett. Click the link in bio if you want to learn more. Thanks for watching. Please like and subscribe, and let's get started.
As a retail investor, I'm sure you've heard of the SEC or Securities and Exchange Commission. They're actually on your side as an investor. If you ask,
So they're not just on the side of retail investors, they're on the side of all investors. They have three goals: one, to protect investors; two, to maintain fair, efficient, and orderly markets; and three, to facilitate capital formation.
if you ask Elon Musk, he might give you a different answer. The SEC requires companies to file a 10K, 10Q, 8K, Forms 3, 4, and 5, and lastly, a Form 144. In this
He's missing the proxy statements. That's the Form Def 14A. The proxy statements are pretty important, so I'm surprised he didn't mention it, but maybe he'll talk about it later.
video, we will go over all of these filings and why you as an investor need to know what these are, as going through these all play a part in doing proper due diligence. In this video, we will go over all of these filings and why you need to know what they are. Welcome to Wealth Gambit. On this channel, we cover the latest stock trends and research. If you like that type of content, be sure to like and subscribe. It shows
Feel free to subscribe to Wealth Gambit. Thanks for making this video. I appreciate it.
that around 80% of you guys watching aren't subscribed, so if you want to see more videos like this, be sure to do that. Also, please note that we are not financial advisors, so always do your own due diligence.
I'm also not a financial advisor.
Before we move on to the SEC filing, let's first take a look at what the SEC is. SEC, or Securities and Exchange Commission, is a government agency responsible for the regulation of the securities markets and protecting investors. Basically, the SEC is there to protect the investors from companies that are not being transparent to people. On the other hand, SEC filings are a set of periodic financial statements and other disclosures that public companies, certain company insiders, and broker-dealers are required to file. These
In theory, the SEC is part of the US government, but it's independent so that it's supposed to avoid political influence in its regulatory enforcement activities. It was created to regulate the securities markets and to restore investor confidence.
filings are not a matter of if the companies want to disclose the documents or not, because it is a must, or else the SEC will come for them.
Not all companies need to report with the SEC. It's mostly the public companies traded on the stock market like the NASDAQ, New York Stock Exchange. But then, even if a company isn't traded on a major exchange, if it has more than 2,000 shareholders and total assets over 10 million, it needs to file with the SEC.
I'm sure everyone remembers when the SEC came for Elon Musk. The result was Elon Musk and Tesla had to pay $40 million in penalties. Even one of the world's richest men have to follow what the SEC says.
I'm not going to comment about this Elon Musk situation, and I think it's important that the SEC stays independent from political influence.
But there is a reason for this. The stock market crash in 1929 made a lot of investors lose their confidence in investing and in the markets. In one
This is
single
what I was saying.
day, billions of dollars were lost and many investors were affected.
The stock market crash of 1929 is when Jesse Livermore, one of the traders that I talk about in my videos, made his biggest gains in one day.
The United States of America and the rest of the industrialized countries faced the Great Depression, which lasted for about 10 years from 1929 to 1939. This incident led to the creation of the SEC, signed by the late President Franklin D. Roosevelt.
Is regulation good? Should they have led the market crash? I don't know.
Now that we know that, let's take a look at some of the most common forms/filings. Let's talk about the 10K. And no, we're not talking about the long distance running competition.
Good one.
We're talking about the Form 10K. I'm sure you've at least heard of this by now. This is what Warren Buffett reads for fun every day.
That's actually what he does. I can't remember the exact figure, but in Peter Lynch's book, he talks about how he read like 300 to 500 of these reports per year.
Form 10K is a comprehensive analysis of a company's financial condition which is submitted annually. But this is not an annual report. Form 10K is more detailed but lacks photos and graphics, while the annual report is more user-friendly.
10Q is for the quarters, 10K is for the year. The 10K is a full snapshot of the business. It's a lot bigger and more robust. The 10Qs are just a snapshot of the quarter. They're unaudited and they're a lot less detailed.
10K has different parts such as the business summary, which describes the company's operations. It includes information about the business segments, products and services, subsidiaries, markets, research and development, and other important details about the company. Next,
companies need to submit their 10K within 60 to 90 days of the close of their fiscal year. If I had no idea what the business is, I'll read their business summary. I'll look at the management discussion and analysis, and then I'll typically jump to the financial statements. There's a lot of useful stuff in there like business risk, and other information that might be useful for your due diligence.
Is the management discussion and analysis, where the company explains its operations and financial results for the past year. Then the audited financial statements. Financial statements are a lot to go through, but at the same time, so important to understand. Financial statements include balance sheets, income statements, and cash flow statements. There are also additional sections that include the company's management team discussions and legal proceedings. Next,
something that he didn't mention is that you can get really detailed insights into revenue. For example, a 10K typically goes really in depth about product revenues, business unit revenue, to tell you what's actually driving the profits and what's not. If you read the management insights, they'll typically tell you about that. But if you don't want to do that, you can typically just skip and try to find the business unit breakout.
Next up, we have the Form 10Q. Form 10Q is basically a shortened version of 10K, which is filed quarterly. But unlike Form 10K, financial statements in 10Q are unaudited, which means it is not yet checked for accuracy.
These get revised sometimes. I've seen it where there were mistakes that were corrected, but that caused like the stock to rally because of a false reporting. A big company did that last year. I can't remember who it was. Wasn't it like Fubo or something like that? Oh, it was Lyft. Yeah, I remember this in February. Lyft did this. They had like a typo. They had added a 0. Yeah, here we go. They said 500 basis points instead of 5. And the stock soared 60%. That's crazy. When was this? February 14. Lyft stock. 2024, February 14. And then they must have corrected it. I don't know if that's the only thing that's causing that, but it's pretty funny.
Basically, it's not yet finalized. Two are unaudited, which means it is not yet checked for accuracy. Basically, it's not yet finalized. In addition, the information required in Form 10Q is less detailed. Most investors are interested in the Form 10Q of companies and look at their working capital and account receivables, which are factors that affect a company's inventory, share buyback, and even the legal risk that the company faces. So if you want to dig deeper and identify what makes a company weak, this form could help you ace an investment decision.
The financial statements are also available in the 10K, so I don't know why he's making this one seem like it's more important, but anyway.
Need a more precise update on the company and its current situation without the alteration of media and sell-side analysis, then you should check out its 8K forms.
So the 8K has to do when there are major filings between the 10K and the 10Q. For example, if a company is going through bankruptcies, acquisition or disposition of assets, departures, or appointments of executives, they have to file an 8K.
Most of the company's changes are clearly defined by the SEC. These are found in 8K forms, as well as simple events like the release of new products or upgrades. Not just that, but Form 8K discloses legally standardized data that must be honest, accurate, complete, and prevents sample selection bias. Sample selection bias happens when non-random data is chosen for statistical analysis. With this being said, Form 8K provides records that are valuable for financial research and analysis.
They all provide useful information for financial analysis.
If you want to know how much the company management officers earn and the perks of being part of that company, then proxy statements are your best friend.
Oh, he does
Proxy
talk about
statements.
Yeah, I don't think he talked about it in the intro, but proxy statements is the Def 14A.
Are presented prior to the meeting of shareholders, and these can be found on the Electronic Data Gathering Analysis and Retrieval System, or EDGAR for short.
All the SEC forms are on EDGAR. If you go to EDGAR here and you type in a company, you can see how to find the financial reports. For example, this is the 8K he was just talking about. This is the 10Q. And then here we have a 10K. You can go to the filing and you click this first link. And this is where you get these reports. We can go to the management discussion of financial analysis. Here is showing you a breakout of the factories. Go back to the top. Business, we want to learn more about Tesla. Go here. Financial statements. Balance sheets, income statements.
This is the SEC's electronic filing system. Proxy statements are filed before the election of directors and approval of other corporate actions, which are all done through shareholders' vote. What is the purpose of proxy statements? Common stock investors have the right to vote. Usually it is 1 vote per share.
Typically, shareholder participation is really low. So if you own shares of a company, you should try to participate and exercise your right to vote.
Proxy statements, which are required by the SEC, give shareholders the necessary information they need so they can make informed decisions at company meetings. Let's move on.
You can find that here. Proxy, Def 14A. Boom. Here's a report. This report is useful because you can see how much the board makes. You can see their stock options and rewards. Sometimes when I do stock analysis, I'll look at the salary of the executives and I'll see how that grew compared to the revenue. If the revenue grew 25%, but the salaries of the executives has grown 50%, like that's strange management.
On to forms 3, 4, and 5. Corporate insiders are the ones who are required to file these forms. Corporate insiders can either be beneficial owners of above 10% of a class of the company's equity, which is registered under Section 12 of SEC's Act of 1934. It can also be a senior officer or a company director. Let's do a breakdown of these forms. Form 3, or
So this is how you would track insider buying.
Initial statement of beneficial ownership of securities is an initial filing where the ownership amounts are being disclosed. So when a person becomes an
I typically don't look at the SEC for those forms because it's really hard to read. I'll typically go on Open Insider and then you can see what people are doing there.
insider, it's a standard operating procedure that Form 3, or the initial statement of beneficial ownership of securities, must be filed initially to disclose his or her ownership of the company's securities. Form 4, or statement of changes in beneficial ownership, is filed when there is any material change in the holdings of a company, and corporate insiders are required to file this form to the SEC. When insiders initiate transactions that cause a material change in their portfolio, Form 4 should be filed. These include transactions involving common stock, derivative securities or options, warrants, and convertible securities. Now, this is what you see in public websites, where you can notice how much insiders own the company's market cap today.
That's what I was talking about.
Form 5, or annual statement of changes in beneficial ownership, is basically a Form 4, but is filed annually. When corporate insiders fail to report any significant change in their portfolio that should have been on Form 4, this is how Form 5 enters the scene, aka the annual statement of changes in beneficial ownership. Other than preventing illegal insider trading, Form 5, along with Form 3 and Form 4, could help you trace down the movement of corporate insiders, which, by the way, could tell you if the stock is bullish.
If we can tell you if the stock is bullish, I found that tracking insiders is useful, but it's not enough to make an investment decisions just because insiders are buying or selling. Sometimes the insiders don't know anything.
Of corporate insiders, which, by the way, could tell you if the stock is bullish. If more of them are buying, then you're probably on the right track. Lastly, the Form 144, or the Notice of Proposed Sale of Securities. This form is also filed by corporate insiders who want to dispose of restricted company stocks they own, or those stocks that are typically not involved in a public offering. It must be filed with the SEC if there's an order to sell the company stocks during any 3-month period and the stock exceeds 5,000 shares or is worth $50,000.
This is when they sell restricted stock, so they didn't get it through a public offering.
To recap, Form 10K is a comprehensive analysis of a company's financial condition, which is filed annually. Form 10Q is also an analysis of the company's financial condition, but it's filed quarterly and financial statements are unaudited. Form 8K is an update of the company's condition, which is not altered by media. Proxy statements give investors necessary information before an event so that shareholders can make informed decisions. And Forms 3, 4, 5, as well as 144 are forms concerning corporate insiders. So what is the point of understanding these forms? These forms
That's an okay summary, I guess.
will give you a more accurate look at the company data. Knowing the facts and whereabouts of the company would help you as an investor and decide if it's a good idea to invest in the company. A lot of investors just go with the flow and decide based on external factors like friends' recommendations, company simple statistics, and some people even just buy the stock price because it's relatively low to other stocks. Hopefully, this video helped you on your journey. Please remember that we are not financial advisors, so always do your own due diligence. That being said, be sure to like and subscribe if you want to see more videos like this. And until
That was a pretty good video. I think something he was lacking was talking about the timelines of when these forms are filed. I guess his target is for retail investors. His very general introduction to what are the SEC filings. It's a very general introduction to what are the SEC filings, but it didn't go into detail on how you could read them. That might be a follow-up video. Thanks again for watching. Let me know your thoughts in the comments below and what kind of videos you'd like to see me do next.